Good morning, guys. Today I'll be giving you full course on technical analysis, everything you need to know about technical analysis, how to enter a trade, how to exit, how to become a responsible trader, risk management, and so on. So basically, this is the guide that I'll be using to teach you all. You can see indicator setup, the candlestick type we are using, how to spot good entry points, and the rest. Let's head on to trading view, please. So this is my trading view. When you log on to your trading view, this is how the landing page is. So you click on charts, and here is what you get. So first things first, you would bend your screen because you're about to do technical analysis, so it's no joke. So the first thing you do is you change your candlestick to Heikin-Nashis. And how would you do that? So I'm going to be using brush to explain. So you click on this part. Yep, you see that part that popped up blue. Then you click on Heikin-Nashis. You click on Heikin-Nashi. Now you can see the difference. You can see how different the chart is. Let me go back again. See the normal candles. You can see how red, green, and everything. But take a look at Heikin-Nashis. This one can help you identify easier. Now, this teaching may prove difficult because for the past 6 days the market has been ranging like in an awful direction, no up, no down, just continuation. So I'll have to use past data analysis to teach today. So first thing you do is you invite your indicators. The first indicator you should invite is search for EMA, moving average exponential. You can see it, moving average exponential. You click on it. Now normally when you click on it, this is how the EMA will look like, because I've actually changed my settings, so that's why. But this is how the EMA looks like when you click on that first. So you have to go down to settings. See this place here, let me use brush. See this place here is showing. So you click on this part here, EMA, click on settings. Then you change your length to length 200. You go to style. You change the color to yellow. Then the thickness, put it at the third one. Then you can see it. Then you click on exit. So here is your EMA line. You can see this. Now let me tell you the use of the EMA. The EMA is used to identify trend. Now first thing you should put in mind when you're using your EMA is this: whenever the price action, that is this candlestick, is below the EMA, you are looking for short entries. That means you are shorting BTC. I believe by now everyone should have watched the trading on futures. If not, I will leave a link down to know how to enter long and short positions on Binance futures. But this is the technical analysis part. So below the EMA, you are looking for short entries. Above the EMA and coming, Bitcoin has been falling these past few days. So let me look for where the EMA was above. It's okay, now you can see. Now the EMA is above. The candlestick is above the EMA, meaning we are looking for long entries. See when the first crossed over, long entry. See another long entry, long entry, long entry. Now I will teach you how to know if a trade is going to be profitable or not. So firstly, now you know what the EMA indicator is used for. Second indicator you have to apply is your parabolic SAR. Yes, your parabolic SAR. So you click on this FX and you click on parabolic SAR. Done. See it here, parabolic SAR. And voila. Now these are not lines, don't get it wrong. These are not lines, these are dots. This is another way to identify if a trend is strong or not, like this supports the EMA. Take a look at this now. For each and every entry position, you can see how the parabolic SAR supports up, See, let me use my brush. See the parabolic SOR. Up, down, down. You can see it in the down. So that's how parabolic SAR works. Now the next thing you have to do is how to enter a position. This you have to listen attentively from this part on forward. How to spot a good entry position, exit position, and where to place your stop loss. That's the next three things. Let's go to the PDF. Now I've told you what the moving average is, how to put the settings, how to apply parabolic SAR. Now the third one is automatic Fibonacci retracement. It's a tool to guide you on where to find your support and support levels and retracement, support and resistance levels, sorry, and it will also help you spot your entry position and exit position. So what will happen is this. Now I've told you the candlestick type, Heikin-Ashi candlesticks. Now how to spot a good entry position. Step 1, use your EMA to know what type of trend the market is in. When the candlesticks are above the EMA line, meaning we are in a bullish trend, that's an uptrend, then you start looking for long position. I explained that on the chart. When the candlesticks are below the EMA indicator, that means we are in a bearish trend. You start looking for short positions. I explained that already. When the candlesticks are in between the EMA line and that means the market is still ranging, do not trade. It is a rule, my personal rule. Never trade when the EMA is in between, the candlesticks are in between the EMA line. I will show you how to identify that. You can see it here. So step 2, I'm going to teach you how to enter a position using the Heikin-Ashi candlesticks. So what's the first step you do? You use your Heikin-Ashi candlesticks to confirm breakout points. Then you only enter a trade when your Heikin-Ashi candlesticks has formed 3 candlesticks without wick at the bottom. Then your entry position should be at the beginning of the 4th candlesticks. Yeah, I know I rushed that. Let me take it again slowly. Use your Heikin-Ashi candlestick to confirm breakout points. Then you only enter a trade when your Heikin-Ashis have formed 3 candlesticks without wicks. I am supposed to put a comma there, forgive me for that. And at the bottom of your entry position, at the bottom of the 3rd, at the beginning of your 4th candlesticks, that should be your entry position. Then you should always enter after retracement. This is more easier to explain on the chart, so let's head on to the chart. I'll show you what step 3 is, parabolic SR, but let's head on to the chart. Let me explain this Heikin-Ashi candlesticks better. So yes, my chart, you've been able to identify the EMA and the parabolic SOR. Now let's use Heikin-Ashis to spot good entries. Now remember I said only enter a trade with 3 Heikin-Ashis. Let's use a daily time frame. I'm not seeing this small ones now. Okay, perfect. So take a look at this now. 1, 2, 3. Let me use my brush. 1, 2, wait. So see this Heikin-Ashi candlestick, this green uptrend, the one that has passed over the EMA line. This is the EMA line. Now see the beginning here. This first one, second one, they did not have any wick below them. What are wicks? These tiny lines here, these are wick. Anyone that does when the Heikin-Ashi starts forming and you are not seeing wick below, meaning we're already in a trend, either uptrend or downtrend. Now for an uptrend, you can see 1, 2, 3. They don't have wicks, meaning it will go up. See 1, 2, 3, no wicks, and see how it went up. Parabolic SR confirmed it, EMA confirmed it. Okay, let's look for another one. um see, when I said anytime it is in between or sorry, the right English is when it is too close to the EMA, do not trade. Now you can see how close the candlesticks are to the EMA, meaning the market is ranging badly. If you can't enter any position, even after you have seen three confirmations of this thing, hiking ashes, you might still lose the trade because the market is ranging. Nobody knows the direction. That means there's a fundamental analysis somewhere affecting it. So see, we have this thing, three confirmation of hiking ashes stick, 1, 2, 3. Imagine you went to go and take a short position, they considered from the confirmation from your EMA and parabolic SLR. You now went to go and say, hey, let me enter. No, do not enter. It is not clear yet. Do you know why I said it's not clear? Imagine you enter there now, eating retrace. It might hit your position and you might get liquidated before the thing even finally comes down. So unless you have high capital, you can take risk. But me, I don't like risk. So let me show you another example. This is on a daily time frame. See this one now. The EMA is, the price action is above the EMA. It's going up. So let me use a smaller time frame. Let's say 15 minutes. Now there's one thing you should know before you trade. Time frame you are using. Let me show you something. You have, it's dependent on the time frame you use. Pinterest. Okay. Now, so as I was saying, for the course of this training, we will not be using position are for the wheels. They use high amount of capital to enter one position, then they take profits. That's for the big men. So basically what we'll be using here is day trading and scalping. Yeah, day trading and scalping. But personally, I like to do day trading. I use 15 to 30 minutes for my trades. That way I get my profit and high risk management. I've lost a lot of money in crypto already. I am not ready to lose any money again. Let's get back to our trading view. So this is my 15 minutes time frame, and now we know what the EMA and parabolic SR for. We're still talking about Heikin-Ashis. So look at this. Three candlesticks with no wick at the bottom. We are entering the trade at the third candlestick. See, 1, 2, 3. This is where we will enter at this fourth candlestick here. That should be our entry position. Then you see, we say you use our parabolic SR, then we take profit around here. You understand? I will show you how to confirm that this one will reach here. Because normally, let's say you come to the chat now and you just say that this candlestick is forming, you'll be like, how am I sure? I will teach you how to do that. Moreover, I said do not trade when it's in between. I will tell you why this one was able to go up and how to spot entry positions like that. I'm calling delete all this brush from my screen. So see, but personally, me with my risk management control, what I do is that even at this candlestick is forming, me, I will not enter the trade. I will tell you why. As this three candlestick is forming, me, I will not enter the trade, and I'll advise you to do the same. I will wait for retracement. See, this now it has gone up, right? See how it started coming down again. Imagine you did not know you want to set your take profits here. You just say, let me leave like that. No. I wait for retracement. Then after I've gotten my retracement, I'll now enter from these new three candlesticks that are forming. 1, 2, 3. This three candlestick. This is where I'll now enter. Then I'll now take my profit around here. I will show you how to do it. This way, in case for false breakout, That's for price action trading. I'll show you. See the same thing here. 1, 2, 3. 1, 2, 3. If you can't enter, see how the market started ranging. Now you never know, maybe you take profit. Now see how this one now will liquidate you. Listen to, get this again from the beginning. Let me zoom in. You know, I told you are entering from the third of the this thing, third of the Heikin-Ashi candlestick. So what you do is this. After you've gotten 3 confirmation, these three, this thing here. You see these 3 Heikin-Ashi with no wicks. Now they've told you are short. Do not enter there. You wait for retracement. When I see retracement, you see it started going up. Imagine you went to go and enter, you know with retracement. This place now will liquidate you, and right now the market is still ranging. So you do not enter there. You only wait for retracement, then you enter. I'll show you an example. See another one. And again, the reason why this is happening is because you did not confirm from your EMA. See long position. So let's go back to the PDF. Now see what I was talking about. Step 2, number 3. But your entry position should be after retracement. That's for risk management control. Then step 4. Let's do step 3. So step 3 says using parabolic SAR for trend confirmation. Now I'm sure we've gone over step 1. We've gone to step 2 using Heikin-Ashi candlesticks. Then my step 3, after you've gotten 3 Heikin-Ashi candlesticks with no wicks, check to see if your parabolic SOR is below the price candlesticks in accordance to the EMA. Then you enter the trade. Here's what I mean. See, this has given you 3 wickless candlesticks. See, now your parabolic SLR says okay, you enter, but this market is ranging, so ignore that. I'm just giving an example in a very, very, very stupid market. I call it a very stupid market. Then step 4, using automatic Fibonacci retracement to determine entry and exit positions and where to place your stop loss. So this is the main cocoa for the entire today's teaching. This is the main cocoa. So let's head on to the chart. Normally, Fibonacci retracement, you are meant to plot it by yourself, but because when I started, I was like, this Fibonacci, it uses normal candlestick. I don't know how to use Heikin-Ashi candlestick to plot Fibonacci. So I went to TradingView, did a lot of research, and I found out that TradingView has an indicator that allows you, that can help you do this in plot Fibonacci retracement automatically. So this is the live market. This is where we are right now. Let me say 30 minutes time frame. This is where we are right now. So what you do is you invite your Fibonacci. See it here. You click on auto Fibonacci retracement 2. If you cannot find it here, what you do is you click on technicals. Then you see it here, auto joins and patterns. Then you see it, automatic Fibonacci retracement. You click on it, and voila, you get, this is what you get. Now if I want to enter this trade, I would go for a long position. Now take a look at this. The price action has crossed the EMA and it has showed the first distance, and even my Heikin-Ashi gave me 3 confirmation candlesticks. I should enter. Imagine I was going to enter at the beginning of the 4th candlestick. Now see, it started coming down. Now I might get liquidated. That I say, wait for retracement to confirm your entry point. So now you've seen 3 Heikin-Ashis. It started coming down. You wait. This is the resistance. This is the support level after it has crossed. You know, the support level and resistance level, that's another indicator on its own. Maybe after this course I'll show you bonus indicators on how to find support level, entry levels, how to confirm trends, and a lot of them. But pay attention to this. This is how you find your entry position, your exit position, and your where to place your stop loss. Now, if I want to enter this Fibo, if I want to enter this trade now, this is where my take profit will be. You see this part here, this 30,180, this line, this is where my take profit will be. Then this is where my stop loss would be, and my entry position would be somewhere around here. My entry position should be somewhere around here or here. Let me tell you why. Now, you've gotten from your Heikinai candlestick that, okay, we're already in an uptrend. EMA has supported it, but see, it is close to the EMA. So what you do is that you wait for another Heikinai to form 3 candlesticks without wick. Like the candlesticks will form, I don't know, maybe this is 30-minute time frame, you have 24 minutes left. Let me say in the next 2 hours or the next 1 hour or so, it will form those 3 candlesticks. And what you do is just pay attention to what I'm saying. After you are waiting for it to form 3 candlesticks, now let me tell you something. This place already is a support level. This is a support level, meaning that whenever price should reach this place, it must bounce back up before. Now let me tell you how I know all those things. Now, even with my eyes, I can find support levels and entry levels. So what I do is this. The reason why you can see this thing, price action or candlesticks just falling like this, going up like this, because after a breakout from a support or resistance level, price will just be volatile. So what you do is this. Let me delete all these drawings on my distance. So what you do is this. Now the EMA is telling us that, okay, we're already entering an uptrend. This is the support level. Now you see this place here, this place I call a support level. Before it was at a resistance level. Let me tell you what I mean by that. Now see this place here where the EMA is. See this, where this EMA is, this yellow line is, meaning you should be looking for short entries. That is a resistance point, meaning whenever price reaches here, it will bounce back down. But luckily, we were able to break out of it. That's why it shot up. So right now, we are waiting for a retracement. After we've gotten retracement, we get 3 Heikinai candlesticks. Then we enter and we take our profit somewhere around here. There are most times you can still go up to here, but please try to minimize your greed and you stay somewhere around here. Let me plot my own Fibonacci retracement and show you what I am talking about. So right now, let me delete this. So if you want to plot your own Fibonacci retracement, I don't know, maybe you can do research and just check. You can see it's Fibonacci retracement, and you plot from the highest high to the lowest low. See, you are looking for short entries. Plot from here down to here, then you extend. I'm coming. You extend. Okay, wonderful. Now this place here, resistance level, support level, I only use the 0 to 1 Fibonacci retracement for my support and resistance level. So this place here, 30,400 is my resistance level. 28,600 is my support level, meaning whenever price reaches down here, it must surely go back up. So as a pro trader, most times I just clear my chart. I don't even use all this thing, parabolic SAR. EMA is once in a while though, but this is just my Fibonacci retracement and my knowledge. What I do is this. After you've plotted your Fibonacci retracement to, now see, it's broke down poor. This is, if you want to, now it is already below this EMA line here. This place here, it is below its EMA. So look for short entries, right? Let's say you come into the market at this point. You came to the market at this point. Now looking for short entries. What you do is this. It has already told you that, okay, Baba, this is my this is meant to be my take profit level. This place here. This is meant to be my take profit. It has said that okay, this first week has told that this will be our next target for short entries. But you need confirmations. You need confirmations. So what do you do? What do you do is this. It has shown you 3 Heikinaki candlesticks. See, I circled it. Now you wait for retracement. See, it has retraced. It formed 2 already, but it wasn't sure. It formed a few, but it wasn't sure. Now it's certain that whenever green candlesticks, that's the green army, I call them green army actually. It's basically, I put this in a game context. Is this thing still, wait, okay, it's still going. I put this in a gaming context to make me understand easier. Normally, I'd have liked to do this on a Zoom meeting. Maybe another day we can do a Zoom meeting. We can all have a conversation so you can understand all these things I'm telling you. But for the sake of this video, let's continue, please. So right now, we're looking for our take profit, entry, and exit. Remember, I told you this for short positions. This is your stop loss. This is your take profit, and somewhere in between all this line should be your entry positions. So what you do next is you wait for 3 okay, wonderful. This is why manual things are better than automatic. Everyone, take a look at this. It has given us 3. Let me use my brush. It has given us 3 Heikinaki candlestick with no wick, meaning we would break out of this resistance, this support level, and come down. I believe this is a support level. Once I put on my swing high low now, we'll see this is a support level. So we're going down. Actually, the next price action for Bitcoin at this point is $28,874. Right now is retracing. That's why I said after you've seen these 3, you are meant to enter from here. This is our entry position. We're taking a short position here. So this will be your entry position. All you have to do is wait for it to get here. This is your take profits. Remember, your entry position is this third one here. This is your entry position. You enter here and you take profits here. Let me use brush so you can see very well. Entry position, this place. Your take profits, this place. Your stop loss, this place. Do you get the check? Entry position, this line should be your entry position, somewhere around 29,872. Your take profit should be 28,862. Your stop loss should be 30,400. So that is that for Fibonacci retracement. By now you should know that okay, this is that enter. Now my own best bet with my knowledge and everything, Bitcoin is coming down to this point first before you can start thinking of going up. Okay, let me change my EME. So this is how we spot your entry position and exit position. Okay, let me use past data analysis so you can understand what I'm trying to say. My swing, okay, this is my swing high. Let me delete it. So let's just go back to the PDF. Now, so I've showed you how to spot a good entry position with your Fibonacci retracement, to apply your Fibonacci retracement so you can find entry and exit position and stop loss. I have shown you that, but let me expand on that. Let me do an expansion. Okay, let me use an hour time frame. Maybe that way I can see when last we had a good market. Right now, market is just doing like what I don't know. Okay, wonderful. Now, first thing you take note of is this: your EMA. Your EMA is telling you that we're in a bearish market because it is above your price action. Your EMA is telling you that it is above your price action. Next thing you do is this: you use your Ignore parabolic SAR. Ignore parabolic SAR. It's not helpful at this point. So now I told you, you use your Heikinage to confirm. See, 1, 2, 3. This point here. 1, 2, 3. You will not enter immediately. No. Risk management. You will not enter immediately. You wait for another confirmation. See. Okay. It has given you 1, 2, 3. It has given you 1, 2, 3. So you enter from somewhere around here or here. Whenever you spot it, maybe you were sleeping, then you came in, you can enter from here or here, whatever you choose. Then you set your take profit to here. See, you are entering from here. You enter here, you take profits here. Let's plot our Fibonacci retracement to confirm that. So go to see auto Fibonacci retracement. This is why I don't really use this auto Fib extension again, because this one only show you for the recent market you want to enter. I cannot use it to explain it for you, so I have to plot mine. Now let me show you how I plotted it. So this is my Fibonacci retracement. Remember, you place from the highest high to the lowest low. So I'm starting from here. I'm starting from here. I am ending here. Yes, that is where I should do that. Fibonacci retracement. So start from here. So let me adjust it. Okay, wonderful. So now let's start from the basics. EMA has given you confirmation, right? Next, you are looking for Heikinage confirm steps. Okay, let's do it step by step. Step 1, EMA. EMA has told you why in a downtrend, look for shorting positions. So you come here. Let's say you entered it. You this was live trade. The chart started from here. You see, it has given 3. You're like, no, I'm not sure. You wait for retracement. You waited for retracement and you see 1, 2, 3. Okay, you say you enter from here. This 3 place. You enter from here. Then, like I said, where you are entering from, this should be your stop loss. This 40,600. This we are using. Let me use brush so you can see what I'm talking about. On your Fibonacci retracement, this place where you show 1 point something, this gray line here, this should be your stop loss value. Then your take profits should be here. This 0.29, that equates to 29,000. Then your entry position should be somewhere around here. So like I said, you entered from here, you place your stop loss here, and you take your profits here. Now this is your entry position. If you could not enter from here, you come again. Okay, you see this place 1, 2, 3. You can still enter from here and you take your profits here. How did I know all of this? This is basic technical analysis. Now remember when I said on the 30-minute time frame that if I was to take during the live trade, that if I want to take a position, I'll take a short position. See, I said I'll take a short position because it was going to break out. See, let me call my Fibonacci retracement. I went to activate Bollinger Bands instead of Fibonacci retracement. I'm coming. See, remember I told you on the 30 minutes time frame that if I was to take a position, since it has given me 3 candlesticks here, I can enter from here and I'll set my take profit here. Now see, it has given me my take profit already, and it's still even falling because the next candlestick will bring is falling. But to avoid greed, please take your profit from here and run, because after this downtrend it may still come up again, but I don't know. The only way you can, if you're someone that's really greedy and you're using much money, you want to make more money, the only thing you can do is that you have to wait patiently for the next candlestick to form, and it must bring out the one with no wick. like in the next 15 minutes. Now see this timer now, see this timer, this place here. After the countdown of this one, we'll bring another candlestick. So you wait for that timer. When it brings that another candlestick, red one with no wick, you can still enter from that point. Then you do not leave this chart alone, you stay with it. I think your next take profit should be somewhere around there. The reason why I can know this because I already know where support and resistance line is. Or you can just easily plot another Fibonacci retracement. Let me tell you, okay, if you should do more research on Fibonacci retracement and how to plot one yourself. So you just you invite your Fibonacci retracement manually. That's the one I invited now was automatic. That was an indicator for Fibonacci retracement. But for manually, you use this one. So you plot from here. Now let me give you a secret on how to plot Fibonacci retracement. You are plotting from the highest high to the lowest low, meaning after 3 candlesticks and three candlesticks upward, 3 candlesticks downward, the point where both of them meet is where you start your Fibonacci retracement. Then if it's a downtrend, you can see now the candlesticks are coming down, so you drag it down. If it's an uptrend, you drag it up. You understand me now? Start from here, then I extend to somewhere around. I'm coming. Let me shift my charts very well. Okay. So this is my manual Fibonacci retracement. So I'll extend from the highest high to the lowest low. So I'll extend it down to here. So for those who just want to enter, if you are coming now, you can say enter. You wait for this timer to count finish. After it has brought out another this thing candlestick with no wick, you take your profit around there. Okay, let me use indicator for short position and long position. So right now, let's take a short position. See, prediction. If I want to predict the price movement, if I want to go to if I want to put my money in this now, so I'll take a short position. I'll say, okay, my entry point should be somewhere around here. Now, in my knowledge, the next candlestick should form somewhere around here. So I'll place my short position and I'll take my profit here. Then remember why I say you set your stop loss. If you're entering from here, your stop loss should be somewhere around here. This is your stop loss. This is your entry position. The reason why your stop loss has to be here and becomes more risky because you're meant to enter from here. But if you came late, you can still enter from here, but it's very, very risky. Sometimes it might even still retrace before it gets to here. But my best bet is that since it's just falling down, it's crossing the EMA, it will fall down, like will just come down. So you understand what I'm trying to say. So I am taking a trade now. I'm taking a short position, meaning I'm betting that the price will fall down. So my entry position is my entry position is somewhere around here, 29,527. This is my entry position. My take profit is 28,942. This is my take profit. Then my stop loss is 30,141. So what will I do now? I'll go to my Binance. So I click on futures and I'll click on, remember it's a short position on which coin? BTC. That's Bitcoin. Let my Binance load. Okay, so this is BTC USDT. So always use your slider to enter. Let's say you have and you're buying a market. Okay, let me use limit. Okay, so you use your slider, this place here, to enter a trade. Now remember my entry position is at $29,545. So I'll come here, I'll input 29,544. Then I'll now click on advance. My take profit, open short. My stop loss is at my stop loss is somewhere around 30,177. So my stop loss, see my stop loss 30,177. Then my take profit is at 28,940 dollars. $28,940. So confirm. So now I have placed an order. So see it here. Take profit, stop loss, entry position. When it gets here, so my order will go and I will open a position. So I believe by now I have covered Fibonacci retracement. Please, if you have any questions, please write them down. Then on our next live Zoom meeting session, you can ask those questions. Yes. So let's go back. Let me remember where our next step now. So let's go back to my doc. So we've done Fibonacci retracements. Now, how to become a responsible trader. Look, if you do not follow all these rules and all these things I've said before, you will lose. God, only if you can know the money that I have lost because I was just chasing price. I was being irresponsible. I was not doing my proper risk management. If you know how much I have lost, you would calm down and be very patient before you enter any position. Remember, trading is very, very risky. Very risky. So risk management 101, that's the beginner's guide to 101. Basically means beginner's guide. So the beginner's guide to risk management is: do not trade against your EMA, that's your moving average exponential. Number 2, don't make a decision based on price fluctuation. Here's what I mean. Now, I know some of you might have noticed that the price fluctuation between is too small. Let's say, I told you we could have entered from here. We'll have entered from here. This 29,000 this thing, $29,834. We're entering from here, then we'll take profit here. That is $28,995. If you see the margin between both of them is small, you may be feeling, this one will give me big money. Let me just take risks and enter from here 30,000. Then when you get to 28,000, that's 200 profit. No, you will lose your money. You will lose your money. I'm not saying it will not work out, but remember, it's live trading. At this point, this candlestick here, it has not formed, so you are not sure. You are waiting for breakout. Sometimes you can even get to this place here, $29,670 something, and with now from green candles you can go up. You've lost your money. Trading is risky. You have to be patient. Very, very, very patient. So that is what I mean. That don't make a decision based on price fluctuation, meaning you are looking at the margin. This margin is small. Any profit you see, run. One of my fellow traders will say, any profit you see, Tifam, no be about bad game market. Okay. Number 3, always be patient and wait for all confirmation. Meaning, all these things I've said, all these things I've taught you, wait for these confirmations before you enter any position. So I was saying about how to become a responsible trader. I don't like how this thing is cutting. So I said, do not chase price action, and okay. Number 4, always set your stop loss. You see this part here. Anytime I've showed you how to use your Fibonacci retracement to set your stop loss. If you are entering any trade and you don't set your stop loss, look, you are taking 100% risk, meaning you can lose all your money in a blink of an eye. I don't want to emphasize much on this due to the money I've lost. No, in fact, let me even show you. Let me what is there, because I always chase price fluctuation. I always felt, I that late. All these things I've taught you, these are from my experience. This is what has made me a good trader. You see all this retracement and everything. Normally, if it was any YouTuber, anything, they just tell you, okay, enter the first like Inashi, and they'll not tell you based on it. Because these are things that I've worked. I've stayed up 2 nights 48 hours straight up, just looking at my chart back to back, because I knew how much I staked to trade that day. And guess what? I lost it. Why? Just because of a foolish mistake. I did not set my stop loss number 1, and I just, in fact, I clicked. Let me not tell you. Let me emphasize on what happened that day. But see what? Okay, because for the sake of this video, for the past 2 days, I've been putting I've been taking irresponsible trades, trying to chase price action, so I can show you. See my paper trading account. See the losses: -$1,000, -$6,000, -$800. These are for irresponsible trade. I'm showing you. Imagine you went to go and enter a trade with $100. You did not set stop loss. You went to go and chase price action. This would be your results. If you go and enter without Fibonacci retracement, -$5,000, -$6,000 for you. That's so. Like I said, be calm when trading. Nobody's pursuing you. It's your money on the line. Let me tell you something. It's better for you not to trade than for you to lose a trade. Yes, you have $100. Instead of you to take that $100 to collect $150 or to collect $200, or for you to lose that $100, it's better for you not to even trade at all. Because by the time you lose money, I don't know if you guys have, you know what it's like to be liquidated. If you should get liquidated, the kind of pain it comes with, whoa. So let me move on. So don't use all your capital to enter one position. You see this one, it is a very, 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 very important thing. So there's something called trading goal. Let's say you carry, now right now what I expect you to do is that after this video, now we will have a live meeting, a live Zoom session, whereby you ask me any questions you want, write them down. We would have a conversation on Zoom, anything you want, so you can get the clear picture. Now after that, what I expect you to do is for you to carry whatever amount you are willing to risk or try out. You either say $50, $100. Please don't carry something $100. Use $100 to start, $50 to $100. Now you apply each and every one of these things step by step. Apply everything step by step. Let's say you start with $50 now. You start with $50 now. Now, when I mean don't use all your capital to enter one position, let's say you have already seen a trade. Okay, you want to enter this position, if you fall down, instead of you to put all your $50 on the line, you split it to use $25 and enter first. If it should come out, you see $15 or extra $25, then you still leave that your other $25 one side, they keep it one side. Use that $50 to keep on trading. When you've now be able to turn that your first $25 to $50, you can now use that $50 you've made, that $25 profit, and add it with your half $25 to start trading everything. Then that other $25, just leave it there. Because look, trading is risky. You might lose that remaining $50. That happened to me before. So you just have to be logic, risk management. You are minimizing your risk. You cannot avoid risk totally. You just have to minimize it. Then number 6, set daily goals based on percentage and avoid greed. Remember what I said about chasing price actions, meaning you're chasing the margin. Let's say 29,400, 29,500. Use percentage instead. I will show you 2 things now. So let's go to my Binance app. So this is my Binance. Now let's say you've come in after take a trade. Now let's say you have $50 and you have transferred it to your futures wallet. Use this slider. Remember I told you, if you have $50, you have $100, split into 2. This slider now will help you use your money wisely. Now by the time you put it in 50% and you press open short. If you use $100, if you have $100 in your futures wallet, by the time you put it in 50%, only $50 will enter the trade. You understand? That is number 1. When I said avoid greed and use percentage this thing. Now once you've entered the trade, instead of you using this thing numbers, you can use percentage. Yes, okay, you can use percentage. So you can just say, okay, I want to make 50% today, 50% gain. See, they say how much gain do you want to make? I can say 50% gain. I can say I want to make 100% gain, depending on whatever you want. For you to make 100% gain, that beats you out to 26,500 or something dollars. That's depending on your capital share. But you can see, use percentage instead. It's advisable. how much is the minimum you can lose. This is wonderful. This is also for risk management. Normally, if I'm not seeing a clear place to put my stop loss, I can also, okay, I don't lose anything more than 50% of my money. Let's say I have $25 now. 50% is 12.5 dollars. I don't lose anything more than $12.5. I can just come and say, okay, 50%. Once it already got to this 50%, I'll just kick me out of the trade. I still have another $12.5 to carry trade. Risk management control. Then you learn how to identify trends, market structure, price actions, all these things. You just go to Pinterest and discover. I'm someone who is more about this thing, knowledge. So price action trading is another step entirely. That is for pro. Meaning, like, if you want to know, you want to be sure, you don't want to just be using Fibonacci, you don't want to just be using signals, you want to just go and find your own entry position yourself, you can still learn price action trading. Now let me show you price action trading. You see all these things right here. This is price action trading. This part alone, price action trading. See different type of price action. You have falling wedge, symmetrical triangle, bullish rectangle, inverse head and shoulder, cup and handle, ascending triangle. These are for bullish trend. On my album, I have an entire I have an entire album dedicated to price action. See, as I'm like this, any price action I see, jam it. This is it. This is my table. Whenever I come here in the charts, I'll be like, okay, which price action is for me now? So a few days ago, I think I sent someone that see the next price action of BTC and he formed it. So that's that on that. Let me show you guys a price action here. Let me show you something. See my former price action. This is a bullish rectangle. I told someone that when this thing breaks off its resist, because this place is a resistance, and once it breaks off now, it's a reverse price action. I cannot start explaining types of price action, how they go on, but me, I shall know that BTC will go up first before it comes down. Even this part alone goes, if it's another price action, take a look at this. I'm coming. I think I locked it. No, I didn't lock it. Okay, see this part safe. This is another price action on its own. Let me do it very well. Okay, this place is this is another resistance point, meaning whenever Bitcoin reaches here, it must form down, and that is around 31,000. That Bitcoin 131,000 anytime soon. See, it has broken off. If you look at this price action now, it has come down already. So now I wait for retracement. This is another to tell you come down. Now take a look at this. I think I mentioned another course on this. This is it here. Rising wedge. See it. A rising wedge price action. This is how I basically see it. Comes from up, goes down, retrace and come down. Take a look at this. Comes from up, goes down, go up again, then come down. Finito. No cap. Me, as I'm like this now, my entry, I would have, I told you that if you wanted to enter, you'd have entered from here. These 3 points, because it will fall down from here down to here. That's price action for you. Like I say, sometimes I don't like using my EMA. I don't even use indicators again. It's old fashioned now. So in case you don't understand anything I've said about price action, in case you don't understand anything at all, I have a full course video on YouTube on price action trading for beginners. Like, you understand everything about price action from beginning to end, how to upgrade your game. In fact, by the time you've watched this video finish, all these things here, you interpret it with just a glance of your eye, and that'll be all. See you next on our next Zoom meeting.